You are about to find out what happens to your money when you invest just $100 every single week. And I am telling you right now, the numbers are going to shock you. Most people have no idea what consistent investing actually does over time. But by the end of this video, you will. And you will never look at $100 the same way again. Welcome to Money Growth Lab. This channel is all about helping everyday Americans build real wealth through simple, proven strategies. If you find this useful, hit that like button and subscribe right now before we go any further. Now let us get into it. Here is the biggest mistake most people make with investing. They think you need a lot of money to get started. So they wait, and while they are waiting, time keeps slipping away from them. But what if $100 a week is actually enough to build life-changing wealth, not just savings? We are talking about potentially hundreds of thousands of dollars, maybe even $1 million, and today I am going to show you exactly how. Let us start by putting $100 a week into perspective. That is about $14 a day. For a lot of Americans, that is one Uber Eats order or a few small purchases throughout the week that you barely even notice. The point is, $100 a week is not a huge sacrifice. It is just about being a little more intentional with where your money goes every single week. Now here's what happens when you take that $100 every week and invest it into the stock market. Specifically into a low-cost S&P 500 index fund. You are not just putting money aside. You are plugging into a system that has averaged roughly 10% returns per year over the long term. And that 10% compounded over time is where the real magic happens. This is not theory. This is just math working in your favor every single day. Let us start with year 5. After 5 years of investing $100 every week, you would have personally contributed around $26,000 of your own money. But because of compound growth, your total portfolio would be worth somewhere around $33,000 to $35,000. That extra $7,000 or so did not come from your paycheck. It came from your money working on your behalf, around the clock, whether you were awake or asleep. Now that might not feel like a huge jump yet, but the compounding engine is just warming up. Give it more time and things start to change dramatically. By year 10, you would have contributed roughly $52,000 of your own money. But your portfolio would now be sitting somewhere between $88,000 and $95,000. You have nearly doubled your total wealth without doubling your contributions. And here's what makes this even more powerful. The growth you experience in year 10 is significantly larger than the growth in year 1. That is because your returns are now generating their own returns. This is what compounding really means in practice. Let me give you a simple way to picture this. Imagine a snowball rolling down a hill. At the top it is small and picks up just a little extra snow. But as it rolls further, it gets bigger. And because it is bigger, it picks up even more snow with every rotation. By the time it reaches the bottom, what started as a small ball has turned into something enormous. Your money works exactly the same way. At the 15-year mark, you would have put in about $78,000 of your own hard-earned money. Your portfolio would be sitting somewhere between $175,000 and $195,000. That is more than double what you personally contributed. And the gap between your contributions and your portfolio value keeps getting wider every single year from this point forward. This is the moment in the journey where people who stuck with it start to feel the shift. They open their investment app and see a number that does not feel real. They remember starting with just $100 a week and wondering if it would ever matter. And now they are looking at 6 figures and realizing it actually worked. Now let us jump to 20 years. After 2 decades of consistent weekly investing, you would have personally put in around $104,000. Your portfolio, assuming average historical market returns, would now be worth somewhere between $320,000 and $360,000. You tripled your money. Not by taking huge risks, not by picking the hottest stocks, just by showing up every week with $100 and staying consistent. But the most powerful part of this entire story comes at 30 years. And I want you to really pay attention here because this is where the numbers become almost hard to believe. After 30 years of investing $100 every week, you would have personally contributed around $156,000. Your portfolio would be worth somewhere between $950,000 and well over $1 million. You started with $100 a week. You ended up a millionaire. That is not a theory. That is just math, time, and consistency all working together. Now here's a comparison that makes this even more real. Imagine two people, same age, same income, same goal. Person A starts investing $100 a week today at age 25. Person B waits just 5 years and starts at age 30. By the time they both reach age 60, Person A has around $1.1 million. Person B has around $650,000. That 5-year delay cost nearly $500,000, not because they invested less, just because they started later. At Money Growth Lab, we say it all the time. The best time to start was yesterday. The second best time is right now. And the math literally proves it. So now the question is, where exactly should you be putting this $100 every week? Because investing in the right place matters almost as much as investing consistently. For most Americans, the best starting point is a Roth IRA. This is a retirement account where your money grows completely tax-free. On a portfolio that reaches $1 million, that tax-free status alone could save you hundreds of thousands of dollars. Inside that Roth IRA, you want to invest in a low-cost S&P 500 index fund. Something like VU from Vanguard, FXAIX from Fidelity, or IVV from iShares. These funds give you ownership in 500 of the largest companies in America all at once. You are not betting on one company doing well. You are betting on the entire American economy, which over the last century has always trended upward over the long term. If your employer offers a 401k with a company match, that needs to be your absolute first priority. A company match is free money, and if you are not contributing enough to get the full match, you are leaving part of your compensation on the table every single paycheck. Get the full match first. Then build your $100 a week strategy on top of it through a Roth IRA or brokerage account. Now I want to address something that makes a lot of people nervous. If you invest for 30 years, you are going to live through some scary market moments. You will see your portfolio drop 20, 30, maybe even 40% during a bad downturn, and that feeling is uncomfortable. It is genuinely unsettling to open your account and watch your balance fall by tens of thousands of dollars. But here is what you have to understand. When the market drops, your $100 a week is actually buying more shares than before. You are getting the same assets at a significant discount. The investors who kept buying through the 2008 financial crisis came out the other side with portfolios that not only recovered but grew far beyond where they were before the crash. The same thing happened during the COVID crash in 2020. The market dropped fast and hard, then recovered and hit all-time highs within months. Every single market crash in history has eventually recovered. Every single one. The investors who got hurt were the ones who panicked and sold at the bottom. The investors who got rich were the ones who kept going. Consistency during downturns is what separates people who actually build wealth from people who just talk about it. Now here is one more strategy that can literally double your results. It is called increasing your contributions over time. Most people do not stay at $100 a week forever because their income grows. If you start at $100 a week and increase your contribution by just $25 every year, after 30 years your portfolio could be worth $2 million or more instead of $1 million. Same time commitment, same basic strategy, just with small intentional increases along the way. You do not need to make one big dramatic change. You just need to be willing to grow your investment a little as your income grows. And the most important practical step in all of this is automation. Set up an automatic weekly transfer from your bank account to your investment account on the same day your paycheck hits. Pay yourself first, before bills, before dining out, before anything else. When investing becomes automatic, it stops being a decision and starts being a habit. And habits are what actually build wealth over the long run. The people who end up with million-dollar portfolios are not smarter than everyone else. They just built simple systems that made it easy to stay consistent, and then they let time do the rest. Here at Money Growth Lab, everything we talk about comes back to this. Real wealth is not built through complexity. It is built through simplicity, consistency, and patience. $100 a week is not exciting. It does not make headlines. But quietly, steadily, over decades, it works in a way that most people never experience simply because they never start. You now know what is possible. You know the numbers. You know the strategy. The only thing left is the decision. Before you go, I want to ask you something directly. Are you going to start investing $100 a week? Or maybe you are already doing it and you want to share where you are in your journey. Drop a comment below right now. Tell me how long you have been investing, what is holding you back, or just say I am starting today. I read every single comment and I genuinely love hearing from this community. And if you know someone who keeps saying they will start investing someday but never does, please share this video with them right now. You could literally help change their financial future just by hitting that share button. Make sure you are subscribed to Money Growth Lab and have the notification bell on so you never miss a new upload. We are here every week with real strategies for real people. Thank you for watching all the way to the end. It means everything. I will see you in the next one.